Good morning, everyone. It's Chrissy from Solstice ATR. You can find me on the website, Instagram, Twitter, as well as Discord. You can DM me. We use this adaptive algorithm for side market, up market, as well as down market. You can hit the subscribe button if you like this video, as well as smash the like button. We are not a broker-dealer. Past performance does not indicate future results. Use at your own risk. Data may not be copied unless it is requested from our website, or you can contact us right at this number up here or the website, which is solsticeatr.com. I want to keep this short and brief for a 10-minute, 7-minute video, and I want to go over specific things that will keep you in line according to what the market is giving us in the next couple of weeks. Let's go to the first slide. This was done on September 18th this morning. What I wanted to show is the S&P, NASDAQ, as well as the Dow Jones Industrial Average. We understand we were in a linear regression downtrend. You can see this downtrend here, as well as this line going down. We tested the 50 simple moving average a couple of weeks ago, about 5 weeks ago. And last week, we were trying to reverse back from that uptrend where we broke out of this consolidation. We hit the 116 simple moving average on the weekly and fall back in the range of this consolidation, as well as this range from the January, February area. What I want to do is keep an open mind to either testing the 200 SMA or if we get a snap back up above the 116 simple moving average. Let's go to the next slide. This was last week's slide, and I put the bearish and the bullish scenario in the charts. And I said, in case of inflation, CPI numbers, are we going to go much deeper? And this was the week before. You can see the September 10th, 2022. That was a short week. We rallied up, tested on the weekly. The 18 simple moving average closed right above it, and that's the NYA. Let's go back to the prior this week's slide. And what I wanted to tell you is just remember, the Federal Reserve Board has been the wild card. They may not save us in the stock market. Keep an open mind on the global economy as well as the slowdown. Let's go to the fourth slide. And if you like it, once again, hit the smash button and subscribe. Let's go for the first slide showing the S&P, NASDAQ, and the Dow Jones Industrial Average. What I want to use is a line from where we are today, where the open was. We're going to zoom in on this weekly chart. We know that the high was here, the low was here. We snapped back on Friday a little bit. We are coming out of compression. If this compression fires to the downside, we got the 200 SMA and the 250 in this box of consolidation of the three instruments. If we fire back up and reverse, we look for the 38 and the 50 simple moving average. What I want to do is show you the scenario for 15% decline or 20% decline from where up here we started the move on the 50 SMA. If I take this line down here and I push it down all the way to a 20% decline, basically we would get to the range of the 41,870 area, 60 area, which will put us right in this consolidation box halfway back. If we reverse back up from this area here, which we consolidated in this candle, took us up, or we want to get a 20% up move in the market, this would put us up about the 61 to 53,200 area in the combination of those three instruments. In case we get a drop further down on this candle a little bit more from the body itself and get another 10% range, that would be about the support area where we broke out of here. And if we fall back through to a 15% decline, that would be about this area right here that we're talking about, the consolidation on those three instruments. Let's take a look at the one by one. What I want to do is the dollar and the VIX. What I'll do, I'll start with the VX, which is the VIX for the ETF funds. We can use that as well. I want to zoom in on the annual chart. You can see that this, every time we had a higher high, we fell back in. We consolidated here. We reversed back. But this week's test, looking up and falling back into the 18 simple moving average and the 50 annual Fibonacci on the chart, is telling me that pay attention to the VIX, because you tried to break up and you fell back in on Friday. But the reasoning behind it on the daily, let's go to the daily chart 1 year. And this is what I wanted to show on it. Have an open mind for either scenario of this move up, because this was the violent move on the CPI report, what they were talking about: employment, inflation, transportation. FedEx has shown on Friday, because the Dow Jones Industrial Average this week got hammered heavily, that the international transporting operation distributions, FedEx came in with lower numbers, dragged the Dow lower. And you can see the VIX on Friday after the spike on Tuesday, Wednesday, Thursday. This is the Friday. Look up, fall back in from the 61. And I had this oval here, and I had this oval here, which we broke out of. And I had this lower oval. Look at the test on the weekly move up and weekly move down. We are still in the range. Is this going to form a head and shoulder to continue higher and break that 28.80 in the 29 area for the market to continue a little bit lower? Pay attention to the VIX or the VX, and I'll show you the VIX, which is the ETF fund for the future VIX. You can see it right here on the charts on the daily where it is. Let's take a look at the dollar, the DXY. The dollar, for every percent that it moves up or down, multiply it by 2.5 standard deviation or 3 standard times the deviation on the S&P or the NASDAQ or the Russell or the Dow. It gives you the direction of those moves in the DXY in relationship to what the market can do. You can see on the daily that reversal. We were coming back in. We retested the 107.50, 108 area and reversed sharply back up. And look at the retest of this high. I had this oval. I had the midpoint of it, which we blew through it on Tuesday. And on Friday, basically the reverse back from the high from this mean where the breakdown was. This is the undecided doji, and then you had the breakdown. We retested it and closed right on a positive note in the DX. Does this mean it can continue lower or reverse to the new high? Pay attention to the Japanese dollar, the European dollar, the Aussie dollar, because the Aussie dollar is attached to the commodities. It will keep an eye on the gold, silver, mining companies, as well as the international currency exchange. Let's take a look at now BTC, Bitcoin. We can see that Bitcoin on the daily chart was trying to come out of this consolidation after the breakdown. We still have this gap up here. We retested a portion of this gap almost. There's still one more down here. I have this oval here. You can see it retested the breakup, trying to look up. Then on Tuesday failed. Wednesday, Thursday, Friday. Friday has created a doji, which is a higher high from this candle. Does this mean if we draw a channel up here, does it hold or does it fall further down to the backside of this linear regression downtrend? I have to take this weekly fib off. I had it on the charts from before remove drawing. You can see if I look at it and I look at the backside, we have a linear regression downtrend. Does this mean it retests the 17,000? Possible. If it reverses back, you can grab this candle. To the upside, it's 13%. To the downside, it's about 17%. It depends what the market offers us. You're between two channels here on BTC. Pay attention in case you get a snap back up. People won't expect it. Let's take a look at the NASDAQ NQ, and I'll do NASDAQ 100. You can see the NASDAQ 100 showing that weakness in it, consolidated, fell further down, and on Friday, it picked itself trying to come back to meet the close, missed the close from the Thursday's range, but stayed in the prior. Does this mean reverse back up, or does it fall down because we lost that downtrend on the charts on the weekly in the NASDAQ? Let's take a look at the RTY. We look at the Dow Jones Industrial Average as well. RTY, you can see it. It's in a, if you consider this is a shoulder consolidation, this is the head of it. This is the shoulder. Does it hold this linear regression channel to come back up, or does it fall further down to the backside of this consolidation here? This is in the RTY. You can use IWM. Let's take a look at the YM, the Dow Jones Industrial Average. You can see the Dow Jones Industrial Average on the daily chart. Once it lost the annual Fibonacci, we had this linear regression uptrend. This look above that report on Tuesday in the Dow really hammered it, as well as the Apple. Remember, we talked about FedEx. We had this two consolidation candle down. This is a reversal candle. If this is hold, this is great. because this is part of this consolidation. If not, you look for the backside, the channel 100% annual low. So let's take a look at the one more chart, which is the S&P 500, and I will call this at the end. You can see on the S&P 500, we have this linear regression uptrend. We came back down, and unfortunately, we reversed back up. Pay attention to from this candle. Do we get back a 6% rate of return to this oval, or do we fall further down about 5% back to the backside of this consolidation? I hope this was helpful. I look forward to seeing you. Take care. Over and out. Enjoy your weekend.